Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Thursday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. We just got a decision out of the ECB about 15 minutes ago or so. They are increasing their bond buying program. As far as micro headlines, the casino stocks caught a bid yesterday. We'll talk about that. We'll talk about some earnings we had from overnight, and we'll take your questions from our chats, as many of them as we can. Premarket.benzinga.com, Benzinga Pro, and on our YouTube channel. I'll throw it to Joe. Oh, also today's guest, Ryan Detrick. He's a senior market strategist at LPL Financial. He's going to put this rally over the past month or so into perspective for us. So that'll be at 8:35. I'll bring Joel on now. Joel, as I try to unmute you here, maybe you unmute yourself, but Joel, give us a quick update here on the overnight session.
Well, I just want to check, Spencer, because there's something maybe wrong with my quotes.
Oh, they're down?
Yeah, the S&Ps are down 9.
Yeah.
So is there something? Do I need to reboot? Or
maybe.
Is there? Does anybody else having that same quote problem? Because I just don't want to give inaccurate data to our listeners around the world. But if this is what I'm seeing here on my platform is correct, we're trading down 8.5 handles. We made a shot at the high from Wednesday, 29.50. 26.75 is the best we could do. We came down under 3,100, that psychological support level at 30.99. I don't think we get any good downside going until we take out the intraday low from yesterday at 30.96. And the ECB comments brought us up to mid-range here, 31.0850. Mid-range is about 31.12. Crude, that's in the red by 35 cents at 36.94. Gold bouncing back after being under 1,700, up 11.60 at 17.0940. Silver dancing above and below 18, but right now up 2.7 cents at 17.985. And Bitcoin up $55 at 9,710. Let's, for confirmation that the market's actually red, let's bring in Dennis here. Dennis, are your quotes working?
Yeah, it's working. It's we're not down nearly as much as we were, though, and you can thank what's happening over in Europe. Again, on monetary policy, helping out the markets here and helping up the markets over in Europe. They were getting hit here ahead of the Fed meeting over there, the ECB meeting. What do they do, Mr. Israel? Looks like just helping out this market.
Yep. So they announced a few moments ago, like I said, more bond buying. The expectation was that they were going to increase their bond buying program by 600 million euros. That was the expectation. And actually, I'm sorry, 500 million, billion, excuse me. When I was saying billion. The expectation was that they would increase their bond buying by 500 billion euros. They actually increased it by 600 billion euros. So more bond buying than expected. They left their deposit rate unchanged at negative 0.5%. Christine Lagarde is due to speak here in about 40 or so minutes from now. And we'll get more commentary when she does that. But they like the stimulus, more stimulus.
Markets love free money. Markets love printing money. Markets love the Fed. They love the ECB. This is what they live on. This is the cocaine that the market is driven on. So not surprising that European markets would rebound off of this. We are off the lows significantly here, Joel. How far are we off the lows here now?
11 handles. 11 handles. We got
buy the dip working again.
Yeah.
Yep. Groundhog Day around here. Buy the dip seems to work every once in a while. If you're looking at separation here, you're seeing the banks very strong here again this morning. We are seeing a continuation of the trade that we've been seeing go for the last 3-4 days. Airlines, very strong. We'll talk about those in a second. I mean, American Airlines, Spirit Airlines. This Spirit Airlines rally is nothing short of incredible. 2 days ago, the stock was trading at $13 or $3, now $19. So you're talking about a 50% rally in 2.5 days. Unbelievable move here in Spirit. So airlines, the cruise lines are down because there was an offering from RCL, but actually I'm wrong. I was going to say probably isn't going to last long, and it's not, because Norwegian's already trading higher. And CCL, did it go green too? Oh yes, of course, because this is what we do. We just buy dips. I don't know. Groundhog Day around here.
What is the Spirit news? That is very up on 2 million shares here, folks. Spencer, give us that news.
I don't think there is news. It's just,
really?
News. Just goes up on nothing now.
It's just going up, and what Spirit
You want
seems
to stop for a second and just so it was Steve Grasso on CNBC last night said he thinks this thing's going up another 50%, and when he said that, thing blasted off, and no pun intended, 50 cents. So a 3-4% move just off of Grasso. That just continues here today. It's unbelievable how much CNBC commentators move stocks.
Spirit seems to be like every morning when I come to my desk and I look at my movers filter in Benzinga Pro, of all the airlines, Spirit seems to be the one that moves in the pre-market the most.
Yeah, for sure. It's got a higher beta. It's more aggressive with how they've obviously the big discount airlines. It's got the higher beta. It always did. It always moves more than the other airlines. So it's not surprising when the airlines are up. If you're seeing an LUV up 5%, it's not surprising the Spirit would be up 10%. So it's just, you got to know when you're trading these things, obviously the different relationships, and some are more volatile than others. It's like AMD is much more volatile than Intel on any given day. If Intel's down 1%, a lot of times AMD is down 2%. Just to know that stuff and know those relationships allows you to obviously hedge better, but also to take advantage of a relative mispricing.
Don't they? I mean, they're more local, right? Or more U.S. based. I don't even think they do any international travel, correct?
I don't believe so.
Yeah, and also, I don't know who I was discussing this with. Maybe my brother-in-law. I'm not sure. Maybe they're in a little better cash position than some of these other airlines. Don't quote me on that, but
Spirit?
Yeah.
Oh, I don't think so.
No?
I think Spirit's the risky one, but it's the one that's been hit the most too. Like if you look, where's LUV? $36 still. It's only got half the losses. So SAVE was the one that was teetering. It's probably the weakest in positioning. The reason it's up is because the weakest are rallying the most right now. So the stocks that we thought might potentially go bankrupt, this is the non-bankruptcy trade. This is the reopening trade. This is the hope trade that, hey, Spirit Airlines actually might make it. And if it does, the stock is probably cheap. So it's still, we're not out of the woods. Don't kid yourself on any of these airlines. This is the reopening trade. This is the hope trade. And if we don't go back into lockdown, if COVID does get contained, these stocks are cheap. If COVID comes back and we go into a second lockdown, there's a high possibility that all of these airlines may, and Spirit being one of them, may not make it. So it's all about, going forward, what's going to happen going forward? Can they survive if we go into a second lockdown? Right now, the market is thinking zero about a second lockdown. It is full on reopening. COVID is gone. We're good to go. I don't know if I believe that. That's why I still sit with a lot of cash. With that being said, you got to be long right now from a short-term perspective because this market just wants to go higher.
All right, let's just take a look at Spirit Airlines here on the move, up $2.35 on over 2 million shares. That is a lot of shares. That means there's a lot of buying, a lot of selling going on out there. And for you pre-market traders, 20's got to be just a psychological level. Let's see if there's any offers there. Where do we trade up to? We just traded up to, right, I don't think we hit 20 yet, did we? 20 on the kisser, right there. We hit 20 right on the nose. We've backed off. What about the dailies? On the dailies, you got a gap fill here. Ooh, to 2014. So you can be buying it at 20. You could try and sell it at 2014. I think that's a big area just for the fact it's just shooting up here today. Gets over 20, holds 20, first 15 minutes, a half hour, well, then look for 21. But just clearing that $20 hurdle, big move so far. I'm not sure anybody see the books at 20 because it's coming from a long ways down, right? Because it's settled, it's 16
Yeah, it's a good
bucks.
point. When you get to these big whole numbers, those can have some, blockers in there, as in big institutional sellers that might stop from going higher. I would think 20 would stall it out the first time, but who knows? This thing's got so much bloody momentum. Maybe it just cuts through that like a hot knife through butter. I mean, it's unbelievable the move here. But if you're coming in, you're buying Spirit Airlines now. You're buying a stock that is up almost 100% in 7 trading sessions. This is chasing again. And I know it's paid to chase in some of these cases, some of these stocks it has, but you get pullbacks. It's just like DraftKings. We were talking about that a couple days ago. And I said on the show, and it was like $44, $45. I said, if you're buying this thing now, you are chasing. Well, look what happened to DraftKings. It fell 15% in a day. I mean, this is how these things go. They go up like crazy and they go down very quickly too on the pullbacks. The pullbacks are wicked. We saw huge money coming out of a lot of these little Momo trades there. That GAN that Jason was talking about, that stock was $26. It was under $20 here this morning. So they do pull back. Sometimes those pullbacks are the buying opportunity. So if you're looking at, different opportunities like on a DraftKings, I wait for a pullback. Well, you got to pull back. The question is it really a pullback when it was $25 a week and a half ago? Where is your support? I mean, you're still at trend. You're still at trend probably at $32, $33. So it's hard to just be a buyer at 39 saying, oh, here's the pullback I've been waiting for. It was a really wicked move. So, the same thing goes with Spirit Airlines. Do you want to be a buyer of pullbacks? Probably. Like I said, I don't see the catalyst here that's going to make everybody all of a sudden think the reopening has failed in the immediate future. Even if you think the summer isn't going to affect it, it's going to take a few weeks before we start getting out there, before we start to see cases really start to pop up. And how much does it have to pop up before the market cares? This market has shrugged off everything. Even if, you start seeing the cases creep up a bit, does the market just shrug it off? The market, now, if you've seen a huge spike and you've seen, that the government's talking about a second lockdown, I think the markets would sell off on that. But there's, a lot of reasons here why the airlines are all of a sudden strong.
And just for me, the 9-day average trading range for Spirit is $1.50. It's up 230. I mean, is it going to have a 2.5, 3.5, 4-point up day? Yeah, maybe. But just based on where it's come from, based on its average trading range, I agree with you, Triple D.
I can't chase this. I mean, this is how. And this is exactly, we talked about this, Trey, I told the story. And, when I started break trading in 1999, the person who was sitting next to me would just jump on every moving train. And he'd, oh, this is going, I better go get in this. And you know what? It would turn on, I'm going to go down. And then, oh, this is moving, I better go get this. And he'd get in and it would turn down. When you're jumping in the thing and the thing's up, 20, 30% the last day, and you're jumping in here now, the pullbacks on these things are wicked sometimes. It's all about. Trading is all about this thing, and Spinner talks about it on the chat too. Finding stocks that are in uptrends, so buying pullbacks on stocks that are in uptrends and selling the pops on the stocks that are in downtrends. That's how that's how I trade. That's how I've always traded. Obviously I do a lot of arbitrage, do different things. But overall, what's the trend? And I want to go with the trend, but I don't want to chase it. I don't want to be buying stocks that are rallying 50% in 2 days, because the thing pulls back 25%. And you're stuck here and you're like, okay, now what? It's still got an uptrend though, so I better hold it. Well, you're down 25% of your money. I don't want to lose 25% of my money. So hard to control the risk. The time to buy Boeing, and we'll go to Boeing here now, was when we talked about it on the show 2 weeks ago at 135. And I set the trade up for you. And I said, look, this is starting to look like it wants to go. And you can stop yourself out at 128, so you can somewhat control the risk. I know 7 points is a wide stop, but you were going for some stock. I did not buy it. I wish I would have, but I didn't. And now it's 181. So if you're coming in now buying it now, it was up $20 yesterday. It's up another 10 today. You're chasing. Chasing sometimes works, but often it does not. I can't control the risk. I'm not chasing. Better places and safer places for me to put my money.
Yeah, just quickly, Boeing kept on going. There was nothing on the dailies to stop it. Stayed up all night thinking of that one.
Go ahead.
70, we're trading. Oh, another 8.5 sticks here.
It's crazy hot.
Wow.
But who took the position yesterday?
Third
was it? I forget already. That Dan we Loeb. Thought took a position.
That was 2 days ago. Dan Loeb.
There you go. So we thought Dan Loeb, and I don't know if we ever got confirmation on that, but
and it's not new. He didn't just take it. It was saying that it was a winner for him in May. So,
but we found out for the first time that Dan Loeb is involved in Boeing, and this is the headline. So that's when the time when you saw that headline
catalyst
that Dan Loeb is coming in, and we know when the headline originally broke, it was 7:55 yesterday morning. So if you were like, yeah, that'll move the stock, and you bought it yesterday morning at the open on the Dan Loeb headline, you took a little heat for the first few minutes, a little come in, buying a little pullback, tried to fill it, and then it just ran and ran and ran and ran, and now you're up 25 points. Don't tell me you can't make money on headlines.
Boeing, I'm looking at this. We're trading at the highs of the pre-market session, and your recovery high, if you really, this is your next target, your only target, 186.48. That was I think like the 20. We had that one day where there was a big market rally. Everything came off the lows. It was March 26th. I'm looking at so many of these charts. And there's that day, March 26th, where everything came out of that low, just exploded and put in levels that have not been reached yet, even though the broad market's a lot higher. That level, I'm just going to stick with 186.48. That's a good target here in Boeing, another $5 away. On the downside, I don't know where to buy this thing. Maybe unchanged, but you might not see that today.
And Spinner pointing out that he bought debt. I mean, the point here is Dan Loeb is involved with Boeing. So the headline was Boeing shares spike. Hearing Third Point has a new stake in the company, and then later we find out that it's buying debt. That was from the trade exchange. So this is all still rumors. But the rumors of Dan Loeb being involved and comfortable enough to invest money in Boeing, whether it's the debt or the equity, was the catalyst to take the stock flying. So what these things need when they have a setup is a catalyst. It had the catalyst, the rumor of Loeb, and that is why the stock blasted off. And then everybody just started buying every airline hand over fist. If you get a catalyst, you often see, a move. And you know what? Props to you again, Spencer Israel. He's been giving us a lot of good trades yesterday.
What did I say?
In the last couple of days. But you talked about the casinos, and we know they're opening today. And then we're saying, you know what? That's a catalyst, and that's something. And the day you talked about it, they pulled back significantly. But yesterday, the day ahead of the reopening, they blasted off. And today again, the simple trade, just buying the casinos ahead of the opening, works again. It's like buying Apple ahead of an Apple event, seems to work often. Buying the casinos before they open seems to work. Wynn Resorts, huge move yesterday, continued move today, up another 3%. Las Vegas Sands up another 4% here in the pre-market. MGM up 7% more in the pre-market after huge moves yesterday. That was just a great call by you, Spencer, talking about these stocks that can move ahead of these events.
At midnight, I think this past midnight was the reopening, or when they can reopen. So
how is it going to work in like a craps table?
I don't know how any of it works. And they were asking, they had an executive from the casino industry on CNBC last night, and they were asking questions like, how are you going to control? Are you going to come down and wipe down the slot machines, with sanitizer when somebody gets up and moves? And she did not even address that.
Really?
But she said, oh yeah, there's no way they're wiping down every slot machine after somebody moves. There's absolutely no way.
And
the manpower.
You're thinking too hard about logistics. You're thinking too many. Forget the details. Details aren't important. It's not important.
Details are very important because it's
just reopening.
You feel safe or not. But yeah, you're right, Spencer. It's a point. The trade's been made. You're right. The reopening trade has been made, and you're right. You don't even, as a trader, you don't have to worry about those details. You see, that the casinos are reopening in a couple of days. I'm going to get long MGM Wynn because they're probably going to run them up ahead of that. If you were doing that simple trade, you made like 20% on your money in 2 days. Those simple trades work. I've made my living trading off the simple trades. And I'm kicking myself that I didn't do that one either. I mean, you can't do every trade. I did 45 trades last night. But, I didn't do the MGM run-up trade. And I was really mad at myself when I saw them trading up after hours. I was like, I totally forgot about it. First of all, I should have been doing it the day before when they were pulling back, when I talked about it on the show. And then, secondly, I didn't do it even the night before. And usually the night before, they're going to run up here too. So easy peasy. Now, if you're coming and buying the casinos now, this is a classic buy on rumor, sell on news. So I don't know if I would even want to touch those. I'm not going to short them, but if you're coming in and buying MGM and Wynn after they just had these big moves now, you've missed the easy money and you are chasing. and it could pull a DraftKings on you if you're chasing.
Maybe they won't even have a craps table open. I mean, that's my favorite. I mean, first of all, you know, if you're standing 6 feet away, I mean,
They aren't going to be able to do the social distancing. There's no way.
The fun thing about craps is, you know, everyone's around the table.
Yeah.
You get the dice going, make the point. Everyone's on the number. Yeah, and everyone's screaming and yelling until the sheriff comes up and locks up all the chips. So I don't know. Maybe everyone will be wearing gloves on the slot machines. That's one possibility, but that's right. Like, who cares now? The trade's over, or may not be over, but it had to move, and let the casinos worry about the logistics. We don't have to.
What the executive was saying last night is they foresee, not somebody, and she didn't address that part of the question, but she said, we foresee, you know, when you come stay in the hotel, we give you a little package. It includes a mask and some hand sanitizer. You know, that's how they're going to address it. They're going to try to clean a little better and they give you a little package. Here's a mask and some hand sanitizer. Good luck. Okay. I mean, if we've knocked it back, you know, maybe you're going to be okay. You know, I don't know. I'll tell you, I'm not going to the casino. I'm not going and playing craps. I'm not going and pulling a slot machine. Not that I was ever a big gambler in the first place. Everybody thinks you're a day trader or a gambler, but I'm not, unless you're Joel. Joel's a gambler, but
gambler, yeah.
It's incredible to just think about, you know, the logistics to how to make that safe. You can't. There's no way you can. So if people start getting sick again, there's a high possibility they might have to close some of these things down again. Hopefully it's not the case, but we don't know. I can't envision, you know, I think the only way is if it's not spreading, you know, it's been knocked back enough that, you know, there's just not that many carriers out there. And the masks are going to help. But are you going to make every single person at the craps table wear a mask? Everybody's yelling through their masks and stuff. It doesn't sound that much like fun.
It'd be hard too, because like if you're doing, you know, $24.6, $24.8, you know, move my 5 to the 10 and, you know, all that stuff. And, you know, those dealers are like, boom, 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 boom. Are they going to be able to hear you through the mask?
And then also, I guess, but
well, also, what about like the chips? Are they going to clean every chip?
Never. No way. No way. I saw you have gloves and that bag that they're going to give you. They're going to be a pair of gloves. There's going to be a mask. There's going to be some hand sanitizer. Every guest is going to get a little baggie. That's what she hinted at. Little baggie, hand sanitizer, gloves, mask, go play. So you're with your mask, you're with your gloves. You're definitely safer than you would be with nothing. But you're not going to be, there's no way to just minimize the risk down to zero. You're going to cut the risk in half probably.
Somehow I get the feeling that the people who are willing to go to a casino right now are not concerned about wearing a mask. So
for sure. The people who are going there right now think this is all a hoax and it's just the flu.
or they just really, really, really want to gamble and they just don't really care about.
Yeah, that could be too. You get the hardcore gamblers. You're right. They'll go in there.
So, you know, what about? I just had something I wanted to say, and it just left my mind.
Uh-oh.
Sorry, I had something. No, it was related to the casinos and oh no, okay. You're talking about a vaccine, Dennis. The New York Times had an article yesterday sourcing from the White House the 5 vaccine finalists.
Okay, let's cover those.
That we had here. So Moderna, Johnson & Johnson, Merck, Pfizer. I wrote them down and I couldn't remember all 5 off the top of my head.
Why are these the finalists? What is it? I don't understand how they're controlling the
world. This is what, according to the New York Times, this is what the White House is saying. Oh, and AstraZeneca. This is what the White House is saying are the finalists for Operation Warp Speed, right? We're going to develop a vaccine in record time.
So these are the companies that the White House is going to help? Is that what we're saying?
Because the White House
I don't think the White House can just stop a company over in Germany from developing a vaccine.
No.
So it sounds weird. Oh, these are the 5 we've chosen to to get the vaccine going. That sounds as weird.
It's the 5 that the White House is saying have the best chance. Essentially,
okay.
This is what the White House is saying. According to the New York Times.
Those 5 companies we've been talking about on this show for the last couple of months. So we'll name the 5 again.
Moderna, Johnson & Johnson, Merck, Pfizer, AstraZeneca. Those are the 5 vaccine. And if you're thinking, where's Gilead? Remdesivir is not.
Sanofi didn't get any love?
No, they didn't.
Probably because they're
Sanofi and GSK did not get on that list. Gilead, remdesivir, not a vaccine; it's a treatment. That's why they're not on the list. But
Sanofi not getting on the list is interesting because Sanofi, I think a lot of people suspect, and I know Scott Gottlieb too, is that this one could be one of the leaders here.
Sanofi is working with GSK on that.
Yes.
And so they're not on this list.
Yeah, so that's interesting. But
You-
I mean,
you said-
Moderna, we've talked
Yeah.
about Moderna. The stock has been wild. It's going to trade on headlines. It's waiting for the next headline. Is it good or bad? If it's good, it could go up. If it's bad, it could go down. The run that you've had in Moderna, there's a lot of, there was a lot of good news priced in. I mean, it has pulled back from the highs, but we also saw, think about Gilead. Yes, it's not a vaccine, but it's a similar play. It's a play on COVID drug, and it's a therapy. But Gilead, the second and third times that they were trying to report positive data, the rallies were less and less and less, and now it's leaked back down and pretty much given it all back. So you're coming in Moderna on the hope trade. Yes, it's a smaller company. Yes, it's more significant to the bottom line than it is on a Gilead, but its stock was $20, $18 back in February. So you're at 60. So you're still up. You're buying something that's up 200%. Lots of good news still priced in there. So if they get good news, maybe it can go a bit higher. If they get bad news, it could get slammed.
One more thing on the casinos. Are they going to have the buffets open? I just don't want to know.
No. You know what? There was actually, and I'm not sure about the casinos, but I believe that they were talking about this on the cruise lines. And I saw this, that they will be switching to plated, like it won't be just the mass buffets. And that's a good news.
You said on cruises?
I think so. When the
then
cruises come back.
what's the point?
Well, they're going to have nice dinners. You sit down. I believe it was, and maybe I'm getting it wrong, but I saw, they had an executive, I believe it was from the cruise industry on there, and they were talking about the move from away from the buffets into more like order your food. So I love buffets. I'm all about buffets. I'm 210 pounds. I like eating.
I'm going 210 bid. 210 bid.
210 bid. I'll go 210 bed with you too. The way when you're locked in your house, you eat more, right? So I'm getting out of my house. Maybe I'll start doing something. But I think they want to move away from the buffets. I think the casinos will do it a little bit too. Not that the casinos is a big thing. These all inclusives is really where the buffets are very popular because it's easy for them. That's a big moneymaker. Throw a bunch of food out there. You don't have to serve the people. They serve themselves. Less labor intensive. It's just easier. But I don't know, like you touch those, it's the spoon that everybody else is touching. The next person comes, touches the next person. All it takes is one person that sneezed on their hand and boom, everybody's getting it. So I've thought about, always thought about that stuff, way before COVID. Now it's like, I don't think I'm going to think about that every time I go to a buffet. So I would not want to be an investor in any type of buffet restaurant here right now. We'll put it that way.
If you ever want to see a stampede, go on a cruise. Well, maybe not now, but if you go on a cruise and they have that midnight buffet, holy mackerel! I mean, it's worth it. Even if you don't go eat the food, but you watch the people line up and the amount of food that they put on their plate.
That's me.
Wait, Dennis, didn't you just go on a cruise like a year ago?
No, I went to Jamaica just back before this started. Remember?
No, but you need to go.
No, I went on a cruise since my honeymoon.
Oh, okay.
We did the Western Caribbean. Did Belize, Costa Rica, and Panama.
Never mind.
Kind of neat. Saw the Panama Canal.
All right,
cool.
sorry to digress.
Okay, yeah, we're off track here.
I've been known to do that.
I want to get to some tickers from the chat.
I have too, Joel.
Somebody asked.
Dennis, that's your whole show.
I want to get to
ticker time.
Yeah,
ticker time Thursday.
I want to get to Genius Brands, GNUS. This has been asked by a few people in the
What's
chat.
going on with that?
It's been running
buyers yesterday
the past couple of days. What?
I said the buyers yesterday were geniuses.
Hey, real quick, we just got initial jobless claims for the week: 1.87 million versus a 1.8 million estimate. So
does that matter?
Bullish.
Continuing claims. Continuing claims 21.5 million. That's just insane. Okay. Anyway, Genius Brand.
Good news is good news. Bad news is good news. Continue.
Yeah, let's get to Genius Brands here. This has been asked by a few people in the chat.
Wow.
GNUS. We have
27 cents. This stock in start of May. 1 month ago is 27 cents. Now it's $9. Woo, boy!
What kind of?
Congratulations to the longs. In $10 on these things. Is there options? No, for real. Sometimes these small companies don't have options because the strikes are 5.5, 7.5, 10. Whenever here's a tip for you when you're trading these small flyers. When you have optionality, and I don't know if you do on this, I'll look right now. But when you have options on these stocks, and yes, I believe they do. They have a lot. No, I don't think they do. I don't see an option chain. If somebody can verify that, I don't think they do. But if you do see some of these small movers have options, the 5, the 7.5, and the 10 are often stopping points for the simple reason that people, that's where they
Good
come in the
point.
money. And if you've got some open interest there, that's where, the market makers start selling the stock against their open option positions, and people are, now speculating further than that. So I don't see an options chain on this. Maybe my platform's just not showing it. But if there was, I would say, we'll look out for the 10. But who knows? These things can go anywhere.
Children Entertainment Company.
Yep. So this is a stock that was going to be delisted and that's been canceled now. But they have two children's networks that they, I guess, are merging, and they also announced how many offerings did they announce in May? One, two, one. I think they announced three offerings in May. Sorry, 4 offerings in May. So they're raising money on the way up here, and they are launching this new children's network called Cartoon Channel, Cartoon with a K. So this was just a Momo play. There's nothing really fundamental going on here.
Sold to you. I'm not interested in chasing this thing whatsoever. We look at this thing in a month and a half, it's probably back to $2 to $3, maybe lower than that. So hot potato game. You come in, you want to chase, but hot potato Thursday. But again, the same story. We talk about stocks like this. People want to get rich fast. This is what they want to talk about. This is what they want to be in because everybody wants to get rich fast. These stocks make you broke fast because they're very hard to time. The hardest thing in the whole world to trade. The algos are all over it. Look how fast it's moving. It's all algorithmic trading. And this thing could be like $6 in an hour. And you'd be like, what happened to me? It could be like $12 in an hour. And, maybe it makes some money. The people who bought it yesterday, you got to get in these things. The time to get in, if you're going to play this for a breakout, was $2. And this is the first time I've looked at this stock, GNUS, but you can see it got up to $2 back in May. Then it had the little consolidation. What have we been teaching you on the show? Consolidation station is the time to place your bets. Time not to place your bets is when a stock has run up 200% in a day and a half, because these things often end ugly. So especially getting these whole numbers at $10, I'm not a hero. I'm not going to try to call the top.
They hate this job. They hate this jobs data, Dennis. We are absolutely coming unraveled here. We just lost 10 million. All of a sudden, unemployment makes a difference.
Selling.
Yep, they're coming in. They're selling. They're selling and they're selling hard. We're just on the pre-market low of 30.98, intraday low from yesterday. All of a sudden, the jobless claims matters. All of a sudden, unemployment is something people are worried about. All of a sudden, today, right now, this second, it makes a difference. But you know what? We'll just pause here at 3,100, rip up. But people are nervous ahead of this jobs number. I definitely would say people are nervous ahead of that number tomorrow.
All right.
I honestly don't know when the whole macro picture starts to matter. It will matter eventually. I don't know when that is. There's nobody that does know when that's going to start to matter, when numbers are actually going to start to mean something. So, interesting that they're choosing today to sell off the market a little bit. I think it's probably more just the fact that the market has been going straight up for a week and a half. It's been too easy on the bulls. We were straight up from 3,000 to 3,120. And this is the little pullback. I think the pullback probably gets bought again. Can it pull back 400 or 500 Dow points? Yeah, easily. I mean, we've had a pretty significant run, but I think I'd be a buyer if we were to pull back significantly, just because that's what this market.
You'd be a buyer significantly? What significantly? 30, like another 50 handles, or what significant?
Yeah, I'm a buyer on all the pullbacks as I'm underinvested. The same reason the other money managers are. I've been buying pullbacks. So I'm not gonna lie to you. Like I've been saying, I'm underinvested. So when we pulled back there under 3,000 back on whatever it was, the Thursday or the Friday, we had the pullback day. I bought 5 stocks that day for my long-term portfolio. I told you the ones I bought. Twitter, I bought Spotify, which was that's more of a play again, swing. Just with a tighter leash, because that's a wild child. I bought Tap. We talked about that one. That one really moved. That was given to us by the intern. I can't remember what else, but I'm not buying on the days we're up 400 points. I'm buying the days we're down. So if I'm looking to invest, I'm looking at, we'll pull back 200, 300, 400 Dow points. I'll look at, my list and what I want to buy. I bought Procter and Gamble. I'm not chasing Save. I'm not chasing GNUS. I'm not chasing DraftKings. But on a pullback on some of these stocks, yeah, if I like the stock and it's on my list, I'll buy the pullback.
Let's get our guest thoughts on this. Ryan Detrick is a senior market strategist at LPL Financial. Ryan, good morning. When do you think the data, economic data, will catch up to the market, or other way around?
Well, isn't that the ultimate question to start off? Good morning, guys. Thanks for having me back. I mean,
welcome.
Yeah, let's start with
Throw
the easy
you into
one.
the fire.
I mean, exactly. Hey, but no, you're right, guys. It's going to take a while. I mean, we've seen the data. When you have job losses like we've had in recessions, it takes years to make up all of the job losses. And we just lost 20 million last month, probably another, I don't know. We'll see what tomorrow says. 8 or 9 million, maybe. This past month. It's going to take a long time. But here's the thing: I was just playing with some numbers. Is what I do, right? I mean, if you look at the COVID-19 testing, guys, we've had over 400,000 tests 7 days in a row. That's according to the COVID testing website. But if you look at all the data before these past 7 days, only 4 times did we have over 400,000 tests. What I'm getting at, we get it, right? There's the biggest disconnect probably in anyone's career between the economy and the stock market. But the reality of the fact that when you get into the stat and all that stuff, more testing and less positive tests are really what we think are a big part of what's driven so much of this rally. And every day I look at that data, it comes out, and we're doing another 450,000 tests yesterday. And that trend, more testing, is what we need to beat this, to isolate it, to see who's sick, to put them so they can stay home for a couple of weeks, and it doesn't spread. And the reality is less and less positive tests are a big reason, we think, why the stock market has done so well, even though I get it, the economy is, historically about as bad as it's ever been.
Ryan, you sent over some good charts. I want to pull one up here. This is just kind of putting these last 50 days into perspective, historical perspective. So we're in the midst of our best 50-day rally ever. Put that into historical context for us.
Yeah, I mean, let's be clear. So this is using data back to like 1957 when the S&P did become 500 stocks. People are quick to point out there were actually larger rallies in the 30s during the Great Depression. It was the S&P 90 then. So, I'm not ignoring that, but I just want to make that clear. But as you look to, let's say the last 75 years or so then, we still just had the greatest 50-day rally ever. And again, that ended yesterday. That's 50 days off of the March 23rd lows. And you can see on the screen there, up 39.6%. Just amazing. But at the same time, we had the fastest 34% sell-off we've ever seen in history. So it's almost like we're just kind of bouncing back where we were. But again, what I like to do is, what did Mark Twain say? History doesn't repeat, but it rhymes. What does it mean? And then you look, that's a good one. But I mean, near term, we think there'll be a pullback. You guys just talked about before I came on. I mean, this is an unbelievable rally, and it makes sense to have a little bit of near-term weakness. But what does it mean 6 to 12 months from now? As you guys can see on the screen, it's only happened 7 other times where we had a 20% bounce in 50 days. 6 months later, S&P higher every time. A year later, S&P higher every time. And a year later, up over 17% on average. And that's double the average year, which gained somewhere between 8 or 9%. So reality of the fact is, yes, this is a disconnect. But what we're seeing with the strength off these lows, and I've come on to you guys for a couple of months saying, we don't think we're going to test the lows, and now we really feel pretty comfortable with that because we've seen so much breadth and so much strength off the lows, and now we're seeing that rotation into the previous laggards. I'm looking at you, industrials and financials, and it's amazing. And the other thing that just came out, and I was just playing with these numbers, I didn't send you this chart, so I didn't know it until this morning, nearly 70% of all the stocks in the S&P 500 made a 20-day high just yesterday. Okay, that's one of the highest readings we've ever seen in history, once again, with number of stocks making 20-day highs. What in the world does that mean? Well, guys, the last 2 times this happened, going back, was January of 2019 and late October of 2011. For people who remember market history, those were not the worst times to be accumulating equities for the next, call it the next 12 months or so. So again, the economy is in bad shape. But what we're seeing from the stock market is telling us that the lows are in, a correction could happen, but like you guys just talked about, it might be an opportunity to buy for higher equity prices going out into the future, 6 to 12 months from now.
Ryan, any insight into which sectors tend to lead the way after periods such as the one that we're in?
Well, yeah, we've looked into that, and our base case is we're sticking with kind of who brought us to the dance. We still like technology and healthcare. I know they've lagged. I mean, they've lagged by a good amount over the past week or so. We're overweight those areas. We are even weight as it pertains to industrials and financials. So, we're sticking with those. I mean, we don't think, the defensive areas are the way to play the next 6 to 12 months, as I just kind of laid out the fact that we think the economy, we haven't talked about the economy. The stock market should do well. We really do think the economy is going to do better the second half of the year. As, again, we're not seeing the major flare-ups that we've heard about. Now, I know with all of the protests and things going on and a second wave and people get out in the summer, we could have some ticks higher. But if we don't, we think the economy, we just had, we're probably still in a recession. I mean, we think this is the most violent recession we've ever seen, but it also is likely going to be the shortest recession. So again, as you come out of recession, those areas like the cyclicals and your technology, you look back, to the 1920s, I think there's been 23 bear markets. Technology led 6 months off those lows, 18 of those 23 times. I know tech's done great. I mean, it's so it's amazing how well it's done, but still, that's another group that we still think will probably outperform or at least match the market the next 6 to 12 months here.
And I like this chart here. The largest reversals, the annual reversals for the S&P index in the same year. So going from the max drawdown to the end of the year return. And I guess the obvious question mark for 2020. But where do you think? You're looking at these years, these rows here. Where do you think that leaves us today?
Yeah, I mean, I think as of yesterday, S&P was down around 3 or 4% for the year, and there's clearly a long way to go. But I did this chart a while back when April 12th, when I did this, and at the time I was just saying, could the S&P really go positive for the year? Or I should say, finish positive for the year. At the lows on March 23rd, we're down nearly 31% for the year, and the numbers said we've never had a year where stocks were down that much year to date to come all the way back and finish green. But I'll tell you, 2020, what we've seen this year, who would doubt, the S&P only 3% away right now, 3 or 4% away, who would doubt that it could come positive? We'd be, we think it's likely. I mean, honestly, not that far away, right? I mean, it makes sense. And this is just another reminder of how truly historic and how many were special. So this year is not special, but just how wild this roller coaster has been to be down that much and even be talking about it. Honestly, a couple of months ago, I don't think we'd be talking about the idea of going green for the year. And we all seen this, S&P or the NASDAQ, or you have NASDAQ 100. I mean, it's a chip shot from all-time highs. It's right there. NASDAQ's not too far away. Small caps, I know they've lagged a lot, but all of a sudden they're taking that baton. There are a lot more small caps than large caps. And, that's that underlying breadth that we need to see. That's how bull markets live, right? They pass that baton around, and that's what we're seeing. So all in all, if we do go green this year, which we think at this point is possible, I mean, very possible, that would be the first year in history where we've got a reversal this large. I mean, just think about that. That's unbelievable.
I'd like to just ask one question here. You've seen this rotation here at the top, out of the big boys here, and since the big boys let us up, I mean, you think we're at a turning point here that now the big boy? I mean, NASDAQ did go up yesterday and make a new all-time high. But is this rotation a good thing? Out of like the tech and the growth companies into value and really into the trash, the airlines and things like this, or they were dominant on the way up. Are they going to be dominant on the way down?
Mm-hmm. Yeah, we don't think we're going to be dominant on the way down. That's a great question. Obviously, the question we're all asking ourselves, we know for 10 years growth has outled value, right? I mean, and then there's been blips, and we really do think this is probably one of those blips again. If you just look at earnings, what we're seeing this year and even into next year, I mean, the large cap earnings is still significant. I'm sorry, the growth earnings is still significantly better than the value earnings on the fundamental front. We still think it makes sense. But the big thing, again, we talked about it from the stats I've just thrown out, just the idea that other parts are kind of participating, I guess, and leading. It's not like tech is lagging by a lot or tech is going down or healthcare is just necessarily going down. I know biotech's weakened a little bit here, but nonetheless, it makes sense to us that this is just a healthy kind of bull market. And again, I get all the economic data, but the other chart I did send you guys, if you want to pull it up, is just how many stocks in the S&P are above their 50-day moving average. Now, I'm aware this is the S&P 500, so don't too many small caps in here, but still, the idea that just various laggards in the S&P are now back above their 50-day, and you guys might have talked about this. This was a big one in the news last week already, but the reality of the fact, again, similar to the other numbers I'm showing, when you have this many stocks above the 50-day moving average, it's historically overbought. Near term, anything could happen. A pullback makes sense. But my, oh my, 6 to 12 months from now, again, there's just another, bullet point for the bulls that say this much breadth that we're seeing is not the hallmark of a bear market. It is the hallmark, honestly, of beginning a new bull market, and suggests, again, higher equity prices 6 to 12 months from now. And a year from now, I'm sitting here talking with you guys. Hopefully Ohio State beat Michigan one more time. Had to get that in there, sorry. But also, hopefully, we've got a vaccine. I mean, there's 140 vaccines in preclinical trials right now, 10 that we know of, at least in human trials. And the odds of having 2 or 3 of those hit over the next 6 to 12 months is pretty good, and that can be a really, really positive thing, obviously, as we get this economy back online. And that's what we think the stock market is sniffing out. I mean, I get the Fed has got too much power and the government is spending money and all the debt. We get all those concerns, and we're not naive to them. I've got the same concerns as a lot of other people about some of those things. But what happened to our economy, we needed to do that, and the stock market is sniffing out potentially better times ahead, and that's what we think is the case the second half of this year on the economic front as well.
One question, one comment before I let you go. I just looking at the IBB here. 2015, you made that crazy top. It came down, took a year consolidation on the downside, back up here near all-time highs. It's just, I don't know, when it takes hits a level, goes down, and takes 4 or 5 years to get back up to it. I mean, what would you be looking at to signify, a huge Fibonacci extension, another move up in this thing, or maybe a 1, 2, 3 year breather? I mean, index is acting like every company is going to come up with a vaccine or cure for COVID-19. I just wanted to get your long-term opinion on the IBB.
Yeah, well, we are bullish biotech in general. So, I can't talk about individual equities necessarily.
Okay.
Clients yell at me, but we like biotech, and I get, the run up. But when we look at some of the earnings prospects, I mean, they just said today that remdesivir could bring $7 billion to Gilead. I mean, that's a lot of money. Last I checked, and that's not even the cure, right? I mean, that's a band. That band gets wrong, but you know what I mean. I mean, that's a drug to help. It's not even the cure. So the reality of the fact is there are a lot of potential in that area, and we are overweight healthcare, like I said. And we like biotech. I know it's pulled back recently, but we've been in it for a while. So it's still a group that we think, when all is said and done, will break out and resolve higher. And last thing for me, maybe, small caps have made a new high for 2 years. And I know you guys know that, but people listening, you think, oh, we've been in this bull market forever. We just pulled back earlier this year. No, small caps have made a new high for 2 years. I mean, there have been parts of this market that have consolidated since early 2018. And that's kind of how longer-term structural bull markets work. We've talked before about the 82 bull market. Yeah, there was a 30% correction in 87, right? We know that. And then the stock market kept going. And we saw something similar in the 1949 to 1966 bull market with some 30% corrections along the way. And we think this bull market started in 2013 on the breakout. Here's our 30% scary correction. And history would say, again, this bull market honestly could have a lot more life to it. And this shakeout, as terrible as it's been, recession terrible as it's been, from an investments point of view, there could still be a lot of opportunity going out several years in our view.
And just, you made the comment there about sports and the Michigan-Ohio State game, which I hear the freshman players are supposed to report June 15th. I've gotten several letters from the university saying if there is games, right, there's going to be limited seating. I think I can pass on going games this year, even for basketball too. But I think that one thing that people like me and maybe some other investors out there, like all the revenue lost, right, for all the sporting events and all the advertising and and you look at, I mean, Disney, incredible, being back up here at 122 and just the baseball season and the jobs loss and all that revenue. Is that, I mean, I think right now, and tell me if you agree, I think the market's just discounting that all that revenue is going to come back and then they're going to assume the regular revenues. And I think at this point, I think if anything is going to change, as a result of COVID-19 and everything, I think it's going to be the sporting world. And I think it's going to be these athletes that are making this kind of money. And I would not want to own a professional franchise right now if you gave it to me. So I just wondered, it's discounting mechanism in the market. Like, it's no big deal that we're going to have a half a baseball season. No big deal. I mean, I guess it's the thing with Disney is they're going to do all the sporting events at Disney. So that's good for Disney here.
Right.
But just, for someone that's having a problem, putting that disconnect with the lost revenue, what would you say?
No, I agree with a lot of what you just said. Other than the fact, I think if someone wanted to hand me a sports team, I think I'd still take it. As a lifelong Bengals fan, I hate them every year, but I think I'd still take that team. So I think I could do better than Mike Brown. Nonetheless, when you think about what has, look at the financial or the tech bubble, right? The tech bubble. What did poorly for a decade after the tech bubble? It was tech. Look at the financial crisis. What did poorly for a decade after the financial crisis? It was the financials. Now, this time we know, look at some of these areas that are getting hit the most, like you said, kind of sports and cruises and hotels and airlines. I mean, if history kind of repeats itself, potentially some of the areas that have been the most impacted, they're going to be the most impressive if we can catch the falling knife, and they're going to have the most, spectacular one-day games and things go the right way. But history would say those might be the areas that are the most trouble, that have a lot of trouble going out the next decade or so. And that's just something for investors to really closely, we think, pay a lot of attention to here.
That's a really good point. Ryan Detrick is a senior market strategist at LPL Financial. Ryan, as always, we appreciate the commentary and the time, and stay safe out there.
Thanks, guys. I look forward to the next one. Take care. Bye-bye.
Thanks, Ryan.
All right. 8:52 here. Guys, I want to cover a few stocks. Let's do Cloudera. They had earnings after the close yesterday. Earnings were good. EPS beat, sales beat, and they gave guidance that was mixed. Their Q2 EPS guidance was higher than the estimate. Their Q2 sales guidance was not higher. Their fiscal year EPS guidance was higher, and their fiscal year sales guidance was not higher. So light on the sales guidance, but above the estimate on the earnings per share guidance for Cloudera.
Dennis, did that buyer get done, or was he just messing around yesterday?
I don't know. I don't remember where he was. But
he was $11.90 for $200K.
He was buying 200,000 shares. He was wrong. If he got done, he's wrong. I mean, it ran up. It's run. Yeah. Look at these things. The thing ran from $8 to $12.40 ahead of the report in 2.5 weeks. So its stock went up 60% ahead of the report in 2.5 weeks. So even if the report was awesome, it was going to struggle to go higher after that. Zoom, which had and Kramer is right, maybe one of the best beats ever in the history of looking at beats. And it was actually down in the report for a little while, and it's going up, but it was the run up that killed it. So Cloudera, his report was fine, but media will try to find, the guidance going forward, estimated sales was a little bit light. I mean, they'll find a fundamental reason, but the bottom line, it just ran up too much ahead of the report.
You did get a dip here, a nice dip. You're still trading down to $1.15, but you were under $11. 1073 pre-market low. I don't know. What was the low from yesterday? Way below that. I'll keep an eye. I would say I wouldn't throw out the baby with the bathwater on this one. I keep an eye on 1050. That's just below the pre-market low, and then you got your 2 and 3 day lows, 1034, 1061. So if they want to support this stock, people that are short term, maybe taking a short position, that 1050 area looks kind of juicy to me. So let's see if it holds that. If not, you're dropping under $10, probably $9.75. But I don't know. It kind of feels like you cut a little bit of a bid here in Cloudera. S&Ps, we did take out the intraday low from yesterday, which was 96. We went to 94.25, but have no fear. The buy the dippers are in. Get us back here closer to 3,100. So we did reach the intraday low from yesterday.
Another one from the chat here. Joel, can you identify any resistance in DXC technology?
XC Technic. Let's see here. I mean, look at it. Spencer, this is a Spencer exercise. Spencer, look at that chart. And without just what jumps out at you?
Well, trying to eyeball. I can't see it here. Here it is.
Can't get the exact.
Here, mid to high 17 area, 1790.
Yeah, I'd say it.
Yeah, 1780, 1790. That range, high 17s.
Joel likes that high from the 29th.
Yeah, that's what I'm looking at.
Joel likes the 1933 high, right?
Yeah. Yep. I mean, it's just because that's the highest high. It is bumping up against it, but from and what I've seen for pattern, a lot of these stocks is they've been bumping up against the recovery high, bumping up, bumping up, bumping up. And then when they can, regardless if it's a retracement, regardless of what it is, if they can finally clear that level, then they really get some gas going. So I would say 1933 just was a high of the move, but you guys are looking more recent. Boy, this thing really moves around. Holy mackerel.
It's a wild child, yeah.
Yeah. Oh boy, oh boy.
But $14 3 days ago, now it's 18. I mean, again, you think, you're not chasing, it's been consolidation station, but from 3 days ago, you definitely are. The time to buy was 3-4 days ago on that Friday when we were down and people were getting spooked again. I mean, you get these pullbacks, and as an 18 handle pullback enough on some of these stocks? Probably not.
I'll go with that. Spencer, your original thing. I was looking a little bit too farther out, but if you're, if you bought this thing over the last couple of days and you're looking at to clear 18 and now you're scratching your head because it's down, I think right now many people would love to see that close to 1785 and let alone the high. So 2 other highs back in that area, I'd be like, maybe be out there at 1775. Just so if it gets quite up there, it doesn't miss it. But yeah, that stock moves a lot. I never realized the ranges that had. Wild child.
There's a lot of stocks that normally don't move around a lot that are moving around a lot in this market here, though. So, everything. I mean, historically, Spirit Air doesn't move 12% just in the morning. It's just you're in this environment where you've got a lot more volatility still. I mean, even though the VIX is well off from the highs, it's still 26, which is basically twice as much as it normally is when it's trading 12 to 13 for years. So 26, think about, even going back in the financial crisis, yes, we got up to 85, 90, but we had a lot of period. The majority of the period was around 30. So you've still got a lot of volatility here in stocks.
All right, couple minutes left to go here. I look at the ratings and then I click off the ratings. Really hasn't been anything significant. More the news. Spencer, you see anything in ratings?
No, not really. I'm looking ahead to the earnings from after the close today, and it's worth noting that looks like RH and Slack and DocuSign have all just sort of taken a breather this morning. What else is on the list?
Work has had such a run up. It's been an incredible run. We even saw some of these stay-at-home plays get hit a little bit, but it had none of it. Again, it helped that Zoom held up yesterday and then actually closed near the highs because a lot of people are expecting this to blow it away. And the question is, can it continue higher if it blows it away? Zoom is telling you it possibly can. So I think the Slack numbers are going to be really good, and probably on a pullback on the earnings, it might be a buy. But there is high expectations here as well. The question is, can they come over the high bar? Zoom did, and Zoom's doing okay, so that bodes somewhat well for work.
And you could argue the expectations are even higher because of Zoom.
You could. It's had a good run, but a lot of people are really on to Slack. Now, again, the valuation makes no sense here to me. I know Jason would argue with me. I can't fathom what's the market cap on Works on Slack.
I got it.
Cool company, cool product. But again, I'll give the same arguments with Zoom. I think if you're putting in your long-term portfolio and want to look at it in 10 years, I think you'll lose money in it.
15 billion?
22 billion.
Right.
So it's worth a lot of money. I mean, it's a cool product. Same thing with Zoom. It's a cool product. It's hot as hell right now, and I don't want to be short it. I would trade it. I don't know. And today, maybe it gets a pop. It's a tough trade now. The trade was when Jason was talking about back when it's 30. And now it's had the run up. I'd probably book profits before taking it through the print, but the Zoom worked out. So maybe the work can work out too. I wouldn't want to be short it.
It's the lesson. I think you can say that for any stock. Any stock. Oh, yeah. Wouldn't want to be short. Yeah, that's the takeaway of today's show. It's scary to be
short stocks here right now.
Yeah.
I mean, at a certain point, I will be short a lot of stocks. And obviously, I still short stocks every single day, but I keep them hedged. But I just don't want to be naked short this market right now because there's no real catalyst in the near future to drive us down. They couldn't sell off on the riots. They couldn't sell off, when we've had, the cases in certain areas like Phoenix going up. It finds a silver lining. The market's really, really, really resilient, and it's a tough short right now.
Yeah. All right. That'll be it for us this morning. I want to thank all of our listeners and of our chatters and our guest, Ryan and Detrick. You can catch a replay of this show on YouTube or on our podcast on iTunes, SoundCloud, Stitcher, TuneIn, or Google Play. Don't forget to hit that like button. Tell YouTube that we exist and their algorithm will like us more. We'd appreciate that. You can always email us, premarket@benzinga.com, for any questions, comments, or concerns. And please remember that all the information from our show is meant to be used as informational purposes and not for investing or trading advice. Everyone, good luck today. Be safe out there. And Joel and I will be back at 3:40, and the full crew will be back tomorrow morning.